Okay, so we are here with the July Habistat data Toronto real estate market update, I guess greater Toronto area. So it's using TREB data through the VOW data system to make a bunch of sexy visuals that Jordon and I are going to review today. So Jordon, how's it going?
Good, man. Let's jump into the carnage.
Yeah. Nothing good to say about the market anymore. Eh? Even the condo guys are going bearish. It's not good.
No, I was confused when I logged into the Habitat and saw the charts were going down and to the right. I'm used to
The up and
up and to
yeah.
the right.
Yeah, I
I
know.
thought something had broken in the feed or whatnot, but
Yeah, all the TikTok guys are gonna have to come up with a new disco move, I guess. So what's going on with price here? I think condos were sort of like the last stand, the last bit of hope that we had, and it seems like they're kind of slowly starting to roll over a little bit. I think if we look at month over month here from it looks like about March, so they peaked a bit later than
yep.
everything else. Um, Now heading down. Is it? Are you starting to feel it on the pre-con side? Like I'm actually still bullish on condos. I think that um maybe not like I think they're gonna have exposure, but they're back on the price floor, right? Like this suburban, all this craziness in the suburban markets push them back to the price floor. Condo rents in Toronto just broke their pre-COVID high as of I
Yeah.
think today. Alex posted that data, and we're seeing a reurbanization of demand in the micro. Like I don't know if we're going to see them come off percentage wise as hard as everything else did. I don't know what your thoughts are there.
I don't think so. They were far less frothy, right? They benefited the least from
Yeah.
COVID stims. And as a result, I think, and also just from the affordability perspective, as rate hikes continue to drive affordability down in the other asset classes, like condos are, of course, the first rung on the property ladder for most people. And we kind of saw that in 2016 and 17 with the introduction of stress test 1.0,
Yeah.
where condos positively benefited, right?
Yeah.
And so I think we're kind of seeing a similar scenario play out, like over COVID, detached freehold properties ran and condos lagged the trend. And we're kind of seeing, we saw a little bit of catch up, but we didn't see much catch up before rate hike started. And that's obviously going to hit sentiment massively. But I will say, like in the last 3 weeks, I've seen an uptick of activity on the pre-construction and the condo resale market. But prices they're not moving, right? They're trading sideways, or in some cases you're seeing 5 to 8% discounts versus February.
Right. Yeah. Yeah. And I guess we can even click through and take a look at sort of what discounts we're seeing in other markets comparatively, right? Like, because I think that's a good reflection. Like condos may be down, like you say, 5 to 10% from apples to apples comparisons, where, looking at, and this is the median, because last time I posted this graphic, people were ripping on me for using the average. So if we look at the median here, you can see a lot of these suburban markets down in the 20% range, right?
Yeah.
Um, and it's not like, I mean, some of these markets, Ajax, Oshawa, maybe a little bit further out, even like a Brock, Keswick kind of thing. Like a lot of those are trading at what a condo would have traded at, right? Like it's not like across the board credit contraction could necessarily be blamed for some of these major corrections. I think that, the reurbanization of demand, the city reopening, and the changing of patterns in consumer behavior probably has a big part in this, right? That maybe,
Agreed.
yeah,
I have tons of clients calling me saying we're called back to the office. Lots of these guys moved to Innisfil, Tiny, further out than that, right? And a lot of them are being called back. And I was just downtown for Canada Day, and I looked around and I was like, "What recession? I don't see
yeah,
one."
yeah,
Everyone's out there enjoying their life. Downtown's reopening. Like it's going to take a while before people feel the pinch, I think. But yeah, I mean that's a big part of it too. It's not just the fact that they appreciated the lease and that they're the price floor product. I think big part of it is that people are downtown again.
yeah. And I think that, the interesting part as well is like, I've heard a lot of this in the HR community, and a lot of it in Toronto, like in investment banking and technology, et cetera. People who are working in an office setting, they're saying, look, you're seeing layoffs happening across the board in the tech sector, in prop tech, real estate technology, financial services, et cetera, right? Banks are doing layoffs. There's going to be value placed on, and it's not even just like that you can say, oh, if you're choosing to work from home as of today, then maybe you're at a higher risk of being laid off by comparison to somebody who chose to be back in the office. But that, it's just the presence of mind, right? If you're in the office, the person is probably like, I would imagine there's a psychology behind that would make them less likely to lay you off because they saw you a couple of days before. And, there's some emotion associated with that. So I'm wondering if like there's almost an element of, the necessity to return to the workplace, even if we're in a recession, right? Because your job's starting to be threatened, and you actually are going back to to the urban core, to the central business district, because working from home isn't protecting your role, right?
For sure. And I think that also applies to just climbing the ladder as well. Like if you're a young gun in your company, and you have, the desire to move up the corporate ladder quickly, like ultimately, unless you're one of the few rainmakers, an all-star, SaaS salesman, or someone who really moves the needle in the business, being there, being present is obviously going to play to your favor.
Yeah, for sure. It's just that reminder too, right? I think in regards to seeing the economy opening in maybe for like from the freedom perspective, right? People going out and doing things like this, this chart right here, the year over year sales volume, to me is pretty shocking, right? And I think that this is going to be a shocking chart until our fall market takes shape, and what that looks like is probably going to determine whether or not we're in a long cyclical bear market from my perspective, or if this is just kind of a short-term blip. Like, if you look at year one of COVID, you had that April low volume, basically where we're in that first lockdown. So that's a bit of an outlier event. And then, I think most of these other years, we haven't really had a true spring market in the past 4 years of data here, except for 2019, right? So if you look at 2019's data, which is the light blue line here, you can see a normal cyclicality, peaks in May, and then sort of comes down throughout the summer, and then a late peak in your fall market. This year we peaked really early, and a lot of the past couple of years, because of lockdowns, et cetera, shuffling around, demand being pulled forward, then being delayed into the spring market. It's tough to know whether or not, the drama of this cross section of data is legitimate. But when you see June being, I think this is the lowest GTA sales in 20 years or something like that, in
21 or 22 years. Yeah.
Yeah. So I mean, I think there's a lot of fear associated with that, right? Especially for people in our profession where, we're at 70,000 agents now on Treb, and they're all fighting for scraps, right?
Yeah, and I think it shows up in the pre-construction data as well too. Somebody, I think it was Alex, posted the new construction sales, new unit sales.
Yeah.
And they're at, pretty close to rock bottom as well. Very similar to like 2017, where we had that, or maybe it was 2018, where we had a year where very few, with like 30 or 40% below the 10-year trend of new construction being sold. I imagine this year will probably shape up to be similar.
Right. Yeah. And I guess from my perspective, the volume, like we haven't even really seen volume led price declines, right? Like if you look at this chart, sort of where volume is rolling over, even if you look at the cyclical chart, kind of peaking in March, and then you go back to your price chart, like they sort of coincide, right? Even if I go to the entire Greater Toronto area here. So most of what's happening in the Greater Toronto area still has nothing to do with the micro trends, right? It has nothing to do with volume declining. It has nothing to do with a mismatch of listings and sales or months of inventory climbing, which I can get to next. Actually, it's a great chart. We haven't even seen the impact of this yet, right? We haven't even seen the impact of being in a buyer's market. We're still in a balanced market. We just got to that. We were in a seller's market until like 2 weeks ago, right?
That's the interesting thing, is seeing prices come off so hard with a technical seller's market still.
Right. And I guess it just proves that it's a very sentiment driven market in the GTA. It's almost like, from my perspective, we analyze this almost like as if it's a financial product, right? And it's like the GTA market has evolved to be this sophisticated thing where it's forward looking into interest rate hikes, right?
Right.
It's almost like it's pricing that in.
I actually 100% think it is.
Yeah.
It's funny because you look at Miami, right? And pre-COVID, Miami had Miami condo market had over 12 months of inventory,
Right.
which is just an unbelievably high number. And then, of
Yeah.
course, it became one of the most popular destinations to relocate to through COVID. And as a result, their months of inventory dove to basically decades low at 4.3. And prices ran at 4.3 months of inventory, which is funny because the Toronto condo market has been under 3 months of inventory for 5 years strong.
Right.
Yet you're still seeing, like, even through COVID, even at the absolute worst of the condo market, there was still only like under 4 months of inventory. So I 100% think the Toronto market in general, the GTA market in general, is pretty forward looking.
Yeah. Yeah. It's interesting to see it behave that way because there was never really evidence prior that it did that. And now, I mean, it looks exactly like a market that has fully reached the financialization of property, right? That it's literally behaving like a stock market.
Yeah.
What does this mean for forward looking supply? Like, I think Jeremiah mentioned he's seen 45 cancellations year to date now. Are we going to see like, more of that, probably more shelving, more delays, and then eventually I would imagine that'll expedite the speed at which we get to equilibrium in the condo market, at least?
Yeah, I think so. So yeah, I think the bulk of the 45 cancellations he's talking about, a lot of it is purpose built rentals. But we're seeing it in new condos, like residential condos as well. We're seeing developers, a lot of them holding off. Like a lot of them are kind of making one of two choices right now, which is, go forward and launch because we have to. For whatever reason, we've been sitting on the land too long. We already broke ground. Whatever the reason is, they have to sell now. There's some that need to, and then a lot of them are just pushing their launches off because they have no desire to launch in a market where it's, you've got your luxury product like Forma that is moving hundreds of units on launch weekend, but then you have other projects that are launching in the suburbs, and they're struggling to move 20 to 50 units on launch, right? So with that level of uncertainty, you're just going to continue to see developers hold off. And of course, I don't think we've hit the wave of cancellations yet. I think it's coming.
Right. And that's projects that are underway that are being canceled.
Yeah.
Right. Okay. Yeah. Interesting. And I guess the other variable is projects that are going to have challenges coming to closing date, right? Like I think that if the current downtrend continues, even if it's only by 10 or 15% in the condo space, that could really put pressure on some of those projects that are sold at, plus 10, plus 20% spreads, right?
Yeah.
Interesting. One of my favorites here, I've been pretty vocal about my perspective on underpricing in bidding wars. So what you have here, the yellow line, which is pretty faint. For those of you who are complaining, I'll give that one out to you right away. Anyway, it's cliffed since basically the peak of February. It peaked at 118%, 118.8%. This is across all property types in every market covered on the Toronto Real Estate Board, and it's dropped now in almost a perfectly straight line to 101%. So we've basically reached a market that is behaving like a balanced market, and a lot of this has to do with the fact that and again, if we're talking more about the analysis of real estate as a financial product, all that had to happen was the bid had to come down to meet the ask, right? Because the ask was already low. And I said this in February, I said this in January. I said, realtors are going to shoot themselves in the foot because they're underpricing product, and it's causing the market to downward price discover faster than it has ever been able to before, because you don't need sellers to change their number, right? You just need buyers to change their number. So now it's going to be interesting to see, again, like to me, we're at this sort of rolling over where when that number gets to 100% and when volume starts to catch up, when we have more listings coming on the market, when we have fewer buyers looking in the market, less sales, more inventory, lower sale to list price ratio. This is where we're actually going to start to see some of those real micro impacted downward price discovery events, right?
I would imagine. It's kind of interesting. Even on this chart, you can see that January and February of this year were essentially outliers.
Yeah.
Like the absolute frothiest of the markets we've had in the last 2 years. Beginning of this year was absolutely insane.
Yeah, for sure. Sort of like your January, February, and March is where it jumped up to from 110%, which was like, don't get me wrong, was was ridiculous. But I think like one of the things that you can't really account for here is that, from like last summer 2021, agents were like, there was actually a period of time where the list price was going down and the sale price was going up, right? So like the bid ask table, if you were to call it, was spreading wide open, and there was so much room in the middle for what just happened to happen like that. And that to me is like how easily that this could expedite downward price discovery.
Yeah,
I'm
and I
going to
think
try and
a lot of realtors are slow to adapt too.
for sure. Yeah. And
Like a
sellers
lot of
too,
the
right?
top producers were calling this early in
Yeah.
February, right? They could start to see the signs and feel it, because if you have 5-10 listings at any given time, you're going to see micro changes in the market. You're going to see it real time. But it's funny because a lot of realtors took multiple months to realize and start advising their clients on, okay, under listing and bidding wars. That's not how it's going right now.
Right. For sure. Yeah. Well, and I think like a lot of us get stuck in those habits, right? It's like, oh, the strategy works. You've built your business on how to do it that way. And it's not easy to change your whole sales system. Again, condos, just looking at condos specifically here. I think that's all I have, condo, and I just had it there. If we just go to condos, it's again, you can just see that they weren't as extreme of a swing. So they peaked at, 113 rather than 119. And it only had that sort of 2 months of higher numbers. So there's a 113 and a 111, and then it kind of was in that just over. But it's already come down to 100% sale to list price ratio on the condo side. So a more realistic market, right?
Yeah, it's just interesting to me that like months of inventory on condos in the 416 is higher than months of inventory on freehold in the 416. Yeah, prices are far stickier so far.
Yeah.
Anyways.
Yeah. I guess that a lot of that could have something to do with the fact that, like it was trading like a more normal market, right? There wasn't room for these insane anomalies. And I think a lot of those anomalies kind of cause people to be confused about price moving forward.
It's true.
Is there any other charts you want to take a look at? I'm trying to think of, I tried pulling up the map actually to see if like I looked at like last year's spring market, or I actually looked at 2022's, or sorry, 2020 versus 2022 to see if like there was sort of like a difference in your COVID exodus. So like if I look for like basically from when COVID started to so if I go March to end of the year, and you can actually see almost, I mean, this one looks actually pretty urban, but there was like a pretty clear reurbanization trend happening, right? It'll take me a while to recreate that cross section. Maybe we'll do it for next month.
Well, it makes sense to me. I mean, like I'll tell you, through COVID, one of the most common things people came to us for pre-construction was projects specifically outside of the core, right? Hamilton, Kitchener, Mississauga, Markham, etc. And in the last 3 months, this story's been the opposite. Most people coming to us for downtown product,
right?
And that's what they're looking to invest in. So you can see the sentiment change in real time.
Yeah, for sure.
You could pull up rental prices.
Yeah, actually, that's a good one.
Stratified by bedrooms. Maybe you could do.
Yeah, I think we have that, right?
Yeah,
there we go. And should I do Toronto only? Let's see.
Yeah.
That's still got there's something. I think condos are ripping.
Yeah, they are.
I think
it's that's a terrible time to be a tenant. Yeah, the four
bedrooms,
plus
yeah.
condos. Yeah.
But if I go to select all, they're where are we? I butchered this somehow. I'm gonna go back. There was another one. Oh, you know what that was? That was just that was sale price. That's why I didn't get to the lease part. Compare by number of bedrooms. Lease. And Toronto, all property types. I mean, you can see them all trending up, other than what is that?
Yeah.
I don't know what that is, that bouncy. I guess that's your 0. or whatever. Maybe, yeah, your bachelor product. I can't really strip that out, but
No, the bachelor product is 0. That's weird. I don't know what the
yeah, there's something else in
parking.
there. Yeah, it could be
No
parking
idea.
units, maybe parking units for lease. It looks like it at like $200 a month. That was like the one example.
Yeah, that makes sense.
But yeah, I mean, across the board, just like pretty massive on the increase. I wonder if we can actually do the cross section. You can on this. Wow, there we go. I didn't know that you could do that. That's sweet. We'd probably pull up this here too and just look at the increase in since from February to June, your increase in rent, and that's just from February, right? I mean, if you go back to, well, what was the last peak? It was basically January 2020.
Yeah.
Yeah, I mean, most of these areas are way up.
Yeah, it makes
obviously.
sense because I know from a median level we've just surpassed sort of the COVID pre-COVID peak, but when you look at apples to apples leases, you're seeing more growth than that.
Yeah. And to me, like, that's the story of this whole thing. You and I were having these conversations, like when I like started podcasting in like 2020, it was like, I was like, I'm bullish on condos because people are going to run away from them for the next 2 years. And then all of this is going to go back to normal and they're going to be the best product that you could possibly buy. Right. I think that they're going to come off in price for the next little bit, and as everything is with credit contraction, but the fundamentals on them are shaping up to be better than anywhere else. And as long as, on the political side, if we have faith that they can reopen Toronto in a meaningful way that's good and sustainable, I would say condos probably have the staying power out of anything else in the market, right?
Yeah, I would agree with you.
Yeah. And if you're thinking long term too, they have a less responsive supply chain, right? Like you're 6 years to get one of those things in the sky, whereas detached builders are already responding on the plus and on the minus side, right? Like they were rushing stuff out during COVID, and now they're
and we're watching supply contract in real time, or new starts anyways.
Yeah, for sure. Okay, man. I think that covers everything I wanted to cover, unless there's anything you want to inject before we wrap up here.
No, that's it. I'm just a fill-in, man. I'm a stand-in.
Yeah,
I have no thought to be on.
Well, I prefer to
go up.
Yeah, fair enough. And they still are, at least on the rental side. You just have to put that piece in, on a metric. Yeah. All right, brother. Thanks for your time, man. I appreciate it.
Yeah, thanks for having me.